private equity and one of the trends we're likely to see. The global economy is on a recovery path. We're told that emerging markets, well, until a few weeks ago, had great yield and the money was coming back into Africa.
You're at 100% right, and thanks for having me. I think you're correct in saying that, if you look at the history, and years 06 to 07, we saw a significant number of funds raising capital in the market. And, fast forward to 2008, where the recession hit, a lot of those were busy with their investment programs. But unfortunately, they had to hold back that capital pending the outcomes of the recession.
Right.
We're now at a point where they're starting to look at the market again, and they're excited about investing. So certainly going forward, we're bound to see quite a lot of activity. Right. What also exacerbates that is the fact that a lot of them are looking at raising new funds. Right. Now, in that context, they need to start showing some exits, which means that all the investments that were concluded in 2007, 2008 need to be realized. So all of that is obviously going to start creating some activity in the market.
Before we look at exit strategies, I mean, we've often been excited about the private equity flows into Africa, and yet there is that geographical distinction between North and South and Sub-Saharan Africa, with a lot of money actually going into what we're seen as stable, good yielding, high return North African economies. Is that still the case?
That is indeed still the case. However, a lot of the investors that are looking in those markets are very cautiously optimistic, as it were, because there's a lot of good growth prospects that one is potentially looking at. But then, over and above that, there's risk that one needs to manage, because, truth be told, a lot of these democracies are not necessarily democracies. Yeah. So, one, yes, is attracted by the potential growth rate, but at the same time, you need to be cognizant of the risk. So, you hear a lot of around the Africa story, but capital is there, but it's not being deployed at the right rate.
I mean, obviously, hot property right now is Nigeria, for instance, and just this week we've heard of 2 private equity companies looking into the acquisition of some of the rescued banks in the whole restructuring of the banking sector in Nigeria. Is Nigeria an area that many investors are interested in, and are banks in general an area where private equity funds would be generating?
Nigeria is definitely on the hot prospect list. A lot of private equity investors are looking into that market, but again, the strategy being adopted is go in with a local partner, go in with someone who understands the market. Reason being that it's a risky market. Therefore, to the extent that you don't understand what you're doing, you might end up seeing your backside. And in fact, 1 or 2 of South African investors have had that experience. So definitely from a growth point of view, we're talking very growth potential GDP growth rate. But then again, you need to be very cautious in getting into the market.
Private equity hotspots outside of Nigeria, within the rest of Sub-Saharan Africa. I mean, obviously, people will always talk about South Africa being a gateway, but where are the uncharted waters, the path that others fear to tread?
Remember that private equity, one of the cornerstones of private equity is that they can take an existing business and they can take a stake in an existing business and they can try and turn that to their advantage. Okay, that really is. And in order to do so, private equity companies need to have the velocity of capital in order to do so. So they either go raise it from private investors, or alternatively they have some of their own money in order to go and do so. Now, how do you add certainty to that? Because quite frankly, if you go beyond South African borders, you're really in uncharted territory. How do you add certainty? Well, firstly, if you're going to do business in the commodity space, you always have the underpinning of a commodity which is priced at a certain level, or a byproduct of the commodity, or potentially a business which has somehow infiltrated with commodities and that you can potentially make money out of something like that long term. Now, that is, so you asked me the question, where is the uncharted territory? Well, it literally is Africa, and it literally is trying to find those opportunities and trying to get the returns from those kind of equities. And remember that up in Africa, this is really the only place that you can make money as far as markets are concerned. Most of these markets, when I talk about stock markets, are illiquid. They're not providing you with an in and out ability. So this is really the only way that you're going to find a way into these markets.
I mean, obviously, Tshego, people are starting to differentiate semantically emerging markets and frontier markets, and as Kwebi's suggesting, there are a lot of frontier markets in Africa where it's very risky. But what about that principle of high risk, high return? In some African economies with growth rates above 6-7% and with commodities at play, the returns have been over 20%, for instance.
The returns are indeed attractive, and in fact, if you listen to what the practitioners in the rest of Africa are saying, obviously one doesn't want to be as aggressive in using gearing and debt in the transactions that you do. So a lot of your returns are bound to come from growth in the underlying companies, which is what investors in the rest of Africa are saying. So definitely, yes, that is indeed the case. But then again, that said, it comes with a risk that obviously one needs to factor into it. So you can make lots of money, but you can also lose bucket loads at the same time.
Okay, looking at natural growth, where is the organic growth then in Africa?
Definitely is the organic, it is the right way. You know, Africa, the rest of Africa, and I'm excluding South Africa in this one, unfortunately has a history of underinvestment in infrastructure. So, you know, the consumer story is still the right story. Now, in that context, you would expect a lot of growth to come organically, because things like infrastructure, your roads, your pipelines, your water sewages, etc., still needs to happen. And all of that is obviously going to fuel this organic growth that everyone is expecting in the market.
Okay, consumer growth is what he's referred to. Yeah. And we know that Africa in general has 1 billion people, of which 170 or so million people is the so-called African middle class, earning above $5,000 US. But there's still this huge untapped potential. And we're talking about people who, with poverty being dented, are earning above $1 a day, even $10 a day. Is that a significant enough market?
Well, you know, this is where that whole process of process of creative destruction happens. Okay, and creative destruction is literally, how do you take a product that already exists and how do you make it better, and how do you find something that that can kind of surpass it? It's a bit like, think about it, what email did to the fax machine. Now you're starting to see that happening in Africa, and India is a great leader as far as it's concerned. So what India is doing is, India is saying, well, there's technology that exists, but for people that earn so little, they can't necessarily use the technology. So what else can we do? Think of water purification systems at $1 a day, you know, that multiple families could potentially utilize. This is where India is such a great innovator, and there is such a gap in the African market, I think, in order to innovate and be able to serve the middle class, which looks very different to the Western world's middle class, but yet is a middle class that could potentially be serviced. You know, who's been successful at that is the cellular companies. They've been massively successful at something like this. And I would say that the no-brainer in Africa for me today would have to be kind of the big infrastructure players. You need deep pockets to go there, but the infrastructure players, electricity, the roads, any of those kind of things. And that's often where governments have a stake, but they need partners in order to partner with them, because you need a population that will utilize this for years and years to come.
Okay, so we've spoken about the telcos, obviously, innovation there, infrastructure, the banks. What about the mines? Because Africa is, as we know, minerally endowed. Just South Africa alone has mining assets worth about $2.5 trillion. But that seems to be really aggressive investment terrain where the strong survive. And yet we know in restructuring African economies, it's really junior miners that would be the so-called private assets to look at.
No, you're 100% right. I mean, the resources story is still a good story in Africa. The challenge you have in some of these African countries is that, unfortunately, democracy just doesn't exist. And therefore, if you're going to commit significant amount of capital, you need to have a level of comfort around security of that capital. So for us to start seeing significant amounts being poured into those markets, unfortunately, countries have to first address the democracies. You know, there's plenty of authoritarian rule that is currently prevalent, and unfortunately that deters and hampers capital investment in the markets.
The difference between private equity and venture capital, because in South Africa, we're told, we've seen a lot of venture capital enter the space, but not necessarily private equity flows. That's even before we talk about FDI in general, that has declined over 60 or 70% in general. Many investors are looking at small caps. They're not looking at major deals, which is what private equity would be.
No, in fact, it's the other way around. I think we've got significant amount of capital invested into private equity, which is established companies with established management teams and track record. So there's definitely capital dedicated towards it. What we're not seeing is funding that is geared towards entrepreneurs. You know, the man on the street who's got a brilliant idea and is looking for someone to inject capital into that startup business. Unfortunately, we're not seeing significant amounts of that. And if you start talking about employment and how we're going to address the unemployment issue, that is perhaps the one area where we should start thinking about committing capital, because the reality of it is that we're just not seeing enough of that.
And value add, because obviously private equity players have a timetable, usually about 5 years, invest in the business, give it some value, maybe list it, and then get out.
Look, gone are the days where private equity was about financial engineering and, you know, putting together the right capital structures. I think that a lot of the players now acknowledge that if you're going to invest in a business, you need to have tangible value-add initiatives. Otherwise, you're not going to see your money's return. For the simple that, you know, Kobe, you mentioned earlier on that, you know, Johannesburg Stock Exchange PEs have gone from 17 to 15 PEs. That is still expensive. If you're paying that amount of money, you need to know what you're going to do with the business. And unfortunately, leverage on its own is not going to help you attain those returns. So you need to spend time with management teams, and you need to be actively involved in the business in generating returns.
Could be anything else?
I mean, I think the one area that I think, and I just want to highlight this as a success story for me in South Africa, is the IDC. You know, Industrial Development Corporation have gone and said, okay, let's highlight a couple of areas that if we get these things right, I think we're going to, you know, we can make inroads as far as job creation is concerned. And they've gone and highlighted those areas, and they invite anybody who wants to, who's got a business plan or he has got at least a product, and they invite them to at least come and talk to them. And the funding is reasonable. It often is way, way below what you can get from the banking industry, and it's literally just to try and create jobs. So I just want to highlight that. I mean, I think that job creation has to go far further than the IDC, but it certainly is a success story for me in its own.